Welcome to the irons class today as we talk a little bit about iron butterflies and iron condors. Welcome, everybody. I think I'll start with iron condor. So let's talk about this subject. I think good range-bound strategies, a little bit different, but they're a little bit similar. How many of you would say how many people have yes or no, Y or N? Yes, I've put on an iron condor or an iron butterfly before live, or maybe no, I haven't. No, okay, that's fine. Kevin's done an iron condor, not a fly. Mike's no, JT, yes. JDH, Paul, yeah. Others have some yeses to that, some no's, and that's fine. I think they're very similar. I mean, like at least with the Think or Swim here, I set them both up using an iron condor because they're both basically you're doing a call vertical credit spread and a call vertical and a put credit spread, two credit spreads in both. They're just structured differently. So let's start with the iron condor. And the first iron condor example I'm going to give you, I would call an equidistant, or at least more equidistant, and that will get the position deltas closer to zero. So the foundation of an iron condor, and let me just put a little context here. Right now in the SPX, we're at 50.75. And I wouldn't put any of these trades on live today. I'd wait till tomorrow, right? Because tomorrow morning, at least as a risk day for range-bound traders in the morning, you have the big inflation indicator. What is that? PC. I get confused all these CPI, PPI, do I. What's tomorrow? What's tomorrow's one? Which C? Something C tomorrow, but kind of a big inflation. So, we could potentially have a gap in the morning tomorrow. So when you look at this first example I'm using, I sell a 52.70 call. Right, in March 22. So this particular example is 23 days. Can you do an iron condor 0 days? Absolutely. Can you do an iron condor 7 days, 30 days, 20 days, 50 days? Sure. There's little tweaks different on each. I personally like a little bit of diversification. I might do some near 30 days iron condors, and I might do some near 10 to 20 days. You can diversify, put more capital into the iron condors a little further out. But the foundation of an iron condor is a short strangle. Selling it, if this is the underlying right now, SPX, and we're going March 22, which is, if we're saying, okay, I'd like to be in this about a week. And if I'm trying to make 10%, what's my goal? How much per contract for one contract? So if $810 is my margin, $1,000 minus my credit, and I want to make 10%, I'm looking to make about $80, right? Per unit. If I do 10 of them, it'd be 800. So Kurt says, would you agree that the wider your spreads are, the closer your returns are to a naked straddle? And is that a good thing, assuming that you want to risk the bigger spread? Again, as in life, as in options, you cannot have your cake and eat it too. If you want to go further and further and further out of the money, you'll get higher and higher probabilities, and your yields will get lower and lower. And to me, this is kind of the somewhere around selling a 10 to 20 delta. To me, is kind of that fine line between good probabilities and a good yield. So I'm looking to be in this a week, and in a week or a little bit more, depending, you got a shot at getting out of this, right? Because here's what it comes down to, right? If I look at this over 23 days and the expected move is about 140, 142 points, how many know what that means? If I stayed in this trade till expiration 23 days, it's saying the expected move is roughly 140 points, meaning SPX, there's a 68% probability, one standard deviation, will be up or down 140 from the current price in 23 days, right? Well, you say, Dan, if you look 140 points from where we're at here, you're, you're way down. If we do that in the next week or in the next 20 days, we're sucking wind, right? I mean, this thing could go down. We could lose some money. But if I'm only looking to be in this. I don't care about the expected move for the duration of the trade. I care about the expected move. How long am I going to be in this? So let's say I'm going to be in this 7 days, or that's my goal. That'd be about 70 points. So if you look at the graph and you look at 70 points up and down from where we're at, right? So on the upside, it would be like, here. On the downside, 70 points would be around here. Are we in good shape on the purple line for the next week? Does everybody see that? Dan, what did you just do? There's a 68% probability in the next week. This is where we're going to be in SPX. Look at the purple line, right? So the probabilities are this is going to simmer like a good cup of Folgers coffee right here. If we stay in the trade, the less time we stay in the trade, the higher the probabilities. Problem is, how long do we have to stay in this trade to get 8 or 10%? Is it always a week? No, it could be 9 or 10 days on the high end. It could be for this type of a trade, a 23-day trade. On the low end, volatilities were higher and they came down. We could be out of this in 5 days. You see that? So does everybody get what I just said the last few minutes, the gist of this thing? How this thing ticks, at least what our goal is? We haven't got into all the risk management, but does that make sense a little bit, even to beginners? At least the game, like explaining blackjack or, just what's the game here? The edge to me is not staying until expiration. The edge in this probability trade is get out of Dodge in about 25% of the duration. Usually we can if you go a little longer, and that's an iron. That's an iron condor. Now, another thing. What if you do an iron condor? How many of you have done iron condors and you sell the call and the put at the same delta? How many do that? So, for example, how many have done iron condors where you sell a same delta iron condor? I'm going to sell the call and the put at the same delta. How many have done those guys? All right. Yeah, I'm very creative. I would call those the same delta iron condor, right? So let's just look for an example. If I sell 15 delta put, 49.10, we're there, 15 delta put. And what if I sell a 15 delta call? 15 delta call is 52.25. So you come down. Well, it doesn't trade that strike 52.25. So I might have to go tweak it just a little bit. All right. But what you'll see is when you're doing near a same delta call and a same delta put, what that's going to give you is something that gives you, it's a little bit short delta, it gives you a little more room on the downside. Do you remember the previous example I gave you? You had more room on the upside than downside. Here are just a tinge short deltas. So if you look at it, this is the underlying, which would be 50, let's call it 50.70. Our short put is 49.10. So we have 160 points away on the downside. On the upside, our short call is 52.30. So I get about 160 points. They're similar, but on the purple line, it's a little smoother on the downside. So it just gives you a little more room on the downside. So that's an iron condor. Josh says, I wonder if the theta decay is always enough going from 23 days to 14, especially if volatility increases. Yeah, it's not always. I would say over time, Josh, I would say if you're putting iron condors on a regular basis, yeah, it does depend on volatility. Volatilities will have an impact, but I would say 25 to be in 25% of the duration on these range bound trades is a pretty good number, right? If you're looking for that kind of 7 to 8 to 10%. But yes, Josh made a good point. You know, if the volatilities increase while I'm in the trade, it may keep me in a little bit longer. A demo says, but same delta makes them a bit unbalanced on the return graph. Yeah, it makes them a little bit unbalanced. You're right, demo. And like this kind of looks centered. But again, I'm more looking at the Greeks. You know, delta and gamma refer to price risk. I want to see, especially in a low volatility environment like we are now, I'd rather be a tinge short delta, because as we go down, volatilities will go up, and I want to have a little bit of short delta when the volatilities rise. I mean, typically, that's like a motto of pit traders would be, generally, if you're short Vega, you want to be a little bit short delta. If you want to be long Vega, you want to be a little bit long delta. They kind of offset each other a little bit. Now, let's just move just to give you a little more. Here's an iron butterfly. How many have done an iron butterfly in their lifetime? And these are nice, just a little different. They're very similar, right? So an iron butterfly, it's just saying, hey, I'm going to sell an at the money call and put. I'm going to sell the options that have the most extrinsic value. That's the part of an option, that decays the most. And I'm going to buy my longs about 50 points out of the money. So in this particular iron butterfly, I'm selling my short call and put at 50.70, right at the money. Why am I selling the at the money? It's got the most extrinsic value. That's the part of an option that decays the most, right? So you're selling the options, two of these. Now, Kurt says, yes, but not in a market like this one. Are you saying you wouldn't do an iron butterfly in this market? And then your wings would be out here at 51.20. Now, how many people think I should ask Kurt, or how many think Dan should ask Kurt, why would you not do an iron butterfly? I already know what he's going to say. Don't tell him, but I've got an answer. Don't tell him. Kurt, why would you not do it in a market like this? Now, I think he's got some good points with his answer. way too volatility. So maybe he means you're saying the volatility is too low, correct? Now, again, so here's my lesson. Do you remember, how many remember the Kung Fu series with David Carradine? Remember the Kung Fu series with David Carradine? And what would happen whenever David Carradine would be going to get ready to get in a big, massive fight with like 25 guys? They'd have a flashback, right? He'd be in the monastery and Master Po would say, Grasshopper, or whatever. You know, when the feathers lays on your head or whatever it would, and then all of a sudden he starts beating the daylights out of 20 guys. The point is, follow the Greeks, right? Now, this particular butterfly. So would I agree with most of you who said I wouldn't do an iron butterfly, or I'd be more careful when VIX is low, you're concerned with the market going down. But is there a butterfly in your arsenal that would do wonderful if the market went down and volatility went up? Is there a type of range-bound butterfly that you could put on that would be able to handle the heat on the downside? So in this iron butterfly, where my long options are 50 points away from my shorts, I call that a balanced butterfly. What does that mean? Balance. So first of all, how do you make money in this sucker? You make money because you're selling two at the money with the most extrinsic value, and you're buying one of the wings. So the essence is these are going to decay more than these are. But if you look at the Greeks on a balanced butterfly, let's just look at this. Look at the Greeks on a balanced butterfly in a low vol environment. And I agree with every one of you. So this is not this is a broken wing when you have equal distance from your longs to your shorts. Equal distance from your longs to your shorts. That's a balanced butterfly, and that will be beautiful on the downside. But it's beautiful on the downside because of the Greeks. Are you all right in saying that you'd rather do a short Vega trade like an iron condor or an iron butterfly in a high volatility environment? Yes. But if you do a balanced butterfly, you're two deltas short. Here's the theta. If we go down tomorrow, if I put this balanced butterfly on today and we go down tomorrow 50 points, I'm doing fine, right? I'm doing fine because the deltas I'll go from short deltas to neutral, but you'll be fine. The short deltas will offset the volatility, right? I mean, if we go down 50 points in the SPX, if we go down 50 points in the SPX tomorrow with the news, is volatility going to explode? Yes or no? It won't. I mean, 50 points is a little more than 1%. It wouldn't explode. Could we go to 16 or something, but it wouldn't explode. Kurt, you could send me I have no idea what your last point was, but anyways, so when you're in an iron butterfly, when you're a little bit short, here's a 70, here's a 50 wide, right? Or, right, I mean, mostly, but anyways, let me go back here. So when you're doing an iron butterfly, we're selling the at the monies, buying the wings. This is a balanced butterfly, right? A balanced butterfly is going to be your cheapest form of a butterfly. So if we're at $42, let's just say, right? We're 50 wide. We're bringing in a credit of $42. So our margin would be $800. And this would be a balanced butterfly, 50 wide. This would be your cost. And your position deltas would be a little bit short. Now, as we go to the world of broken wing, let's go from a 50 wide. Let's go to a 50, 45 wide. Mostly when the VIX is in these levels, we're doing broken wing butterflies. So let's go the first one, 50, 45. Why do we do broken wing butterflies? To get your position deltas closer to zero. How do you do it? So in this case, you would take the upper strike long call, which is 51.20, bring it down 5 points to 51.15. Do you see that? So now I'm 50.45, but when you do a broken wing butterfly, now you're bringing in a $40 credit. Your put side is 50 wide, so your cost goes up, right? When you start doing broken wing butterflies versus balanced, your cost will go up. So if you say, why do I do broken wing butterflies most of the time? To get the deltas near zero. That's the whole reason you do them, right? To get them more zero like that. But so generally, I like butterflies when VIX is starting to get over maybe 16 or 17. But I'll hold off on that conversation because I could get, but just they're both good positive theta trades. And the whole gist is the same thing. I'd like to be in the trade 25% of the time. And it just really, when you start getting outside of these expiration break evens, you either have to close it or adjust it or enlarge the tent. But it's just a very disciplined risk management time. Say one more comment. Who can tell me what's the level of the VIX for this year? For 2 months into the year, without looking, what's the level of the VIX? What's the VIX range this year? The low end is 12.5. The high end is around 16 on a closing basis. Intraday, we hit a 17. That's a very tight range, isn't it? So you would say near 16, I might do an iron condor or an iron butterfly where you'd like the volatility kind of revert back down a little bit. And then when the vols are low, I'd like strategies that would benefit if the vol went up. But the Greeks ultimately let me know that I can do a short Vega trade in a low vol environment or a long Vega trade, more of a short Vega trade in a low vol environment, depending on how the Greeks are set up, right? Do I have enough room on the downside? But generally, I like them at a higher vol environment. So anyways, a little bit of an introduction. I may, in the next 2-3 weeks, I'm thinking about it, to do a class on the irons, right? I'm not sure if I'll do one class on iron condors, one on iron butterflies, or combine them, but I've had that on my mind lately. Can you guys hear me okay? And last thing, for those of you, and I'll answer any questions, for those of you who are off on the weekends, I'm going to do something I haven't done in a long time. I'm going to do a 3-hour webinar. It'll be recorded this coming Saturday from 10 Eastern on Managed by the Greeks, kind of how we used to trade in the pits. And I think it's crucial that you understand the Greeks and what it means. And that will be this coming. If you want some information, you could just go to our front page of the website. It'll give you some information on that. But that'll be this coming Saturday. I kept the California people in mind, starting at 10 Eastern, and we'll go from there. Now, a couple questions, and then we'll let you. Demo says, I looked at your combo trade last week. Combo trade. But compared it to an iron condor, then I realized I could make the iron condor more delta neutral by breaking the call wing, and that worked. Oh, good. Okay. Yeah, it's the combo trade I was talking about. I'm not sure which class that was, but the purpose of a combo trade, doing a butterfly on the upside, calendar on the downside, is to have more of a neutral Vega trade. Your main two enemies as a range-bound trader are price and volatility, so doing a combo trade would more neutralize it. The nice thing about we'll tweak the way we do butterflies, make them either more or less broken wing or more balanced, depending on the vol levels as we go from 13 to 20. Peter says, is it true that retail traders mostly trade theta? Pro traders trade gamma and vega. Good question. Is it true that retail traders, let's focus, Peter had a good question. Jim, I missed them too. Is it true that retail traders mostly trade positive theta? What do you think? I'll give you my opinion. How many of you think that retail traders are more speculative, betting on direction, or they'll do positive theta range-bound trades? What do you think? My guess would be most retail traders, if you took all retail traders, I would think they're bet on direction. I think this is more the minority of trading. I think most people go in, most educators, I think, are pushing the, directional. That's my guess. Yeah. Now, pro traders, gamma, pro traders, when I was in the pit, we were more volatility traders. We traded by the Greeks. I wouldn't, just more volatility traders. But so if the volatilities were higher, we might want to be more positive theta. If the volatilities were lower, we might be negative theta, betting on a move. So it was more based on the volatilities. But remember, when you say pro traders, let me give you my thought on that word. Pro traders with choice and pro traders without a choice. You say, Dan, what do you mean? When I was a market maker specialist at the CBOE for years, did I have choice like you, or did I have to trade? If you're down there in the pit, right, you got to buy on the bid and sell on the ask, right? And if they sell it on the bid, you got to buy it. You can lower it after you buy some, but you have to lower it. So you don't have choice. Does that make sense? Two-sided market. Coomer, maybe someone could, you might have to sign out and sign back in, Coomer. Sorry about that. But so in the pit, it was, it was difficult at times because, if volatility was low and people were buying options, we had to sell it. And we didn't particularly want to sell it. And so we'd have to kind of then turn it into something else that is a different kind of a game. But if you say a professional trader with choice, I think that's even better. You can trade when you want to. Um, uh, Ben says, if the market's reaction to tomorrow's news is lower IV, what type of trade would you do? Oh, I would do, now again, we're at pretty low IV right now, 1384. And let's just keep in perspective. We could go higher, but we've been up in, what are we been up 4 months, 25% in the SPX. Am I correct on that? That's a big stinking move, right? But if the vol's lower, if the levels now are lower, I would favor more calendars, some types of diagonals. But again, to me, tomorrow is today a good day for a range-bound trader to put on trades? Yes or no? Is today a good day for a range-bound trader to put on trades? No, there's risk, right? Well, I mean, why? What are you going to make from a day of theta, right? I mean, wait till tomorrow afternoon, see how the market digests. It could be a nothing burger. I think the last time the news came out, like this PCE or whatever for tomorrow in January, market didn't do anything. But it could, right? It's an inflation type number. But I'd wait till the afternoon. And as long as the SPX hasn't moved much more than 1%, then I would evaluate what to do. I think if we're 12, 13 volatility, long Vega type strategy, 15, 16, 17 short Vega, but I have to take a peek at that. So, all right, folks, well, always good seeing you. And if you have any questions, you could email me. Keep working on the craft, and I will talk to you next time. Thanks, everybody. Appreciate it.